About 2 years back, a US short seller grabbed headlines in India. Its name was Hindenburg Research. This firm had leveled massive allegations against one of the largest Indian conglomerates. Hindenburg accused the Adani Group's chief Gautam Adani of pulling off the largest con in corporate history. The report shook the Indian markets. The Adani Group lost $140 billion in market cap following this report. Investors suffered losses of about 7 lakh crore rupees. Hindenburg later also came out with a stinging report on SEBI chief Madhabi Puri Buch. These reports had become a big talking point in India. Elsewhere too, Hindenburg is known to have gone after several companies and published scathing reports that have resulted in investigations in some cases. So why are we talking about Hindenburg today? It's because the US short seller has decided to shut shop. Many, especially in India, look at it as a positive development, a win for the Adani Group and whatnot. A section believes that short sellers like Hindenburg worked against the interests of India and also that it made big money by targeting an Indian company sitting all the way in the United States. Many also speculate about whether Hindenburg's closure has anything to do with the incoming administration in the United States. Remember, Donald Trump will take oath as the President of the United States on the 20th of January. So why has Hindenburg decided to shut down? Hello and welcome to Simply Put. I am Shubham Chohan. Let's get started. US short seller Hindenburg Research has decided to cease operations. The announcement was made on Thursday by its founder, Nate Anderson. Anderson put out a note saying, "The plan has been to wind up after we finish the pipeline of ideas we were working on. And as of the last Ponzi cases we just completed and are sharing with regulators, that day is today. I write this from a place of joy. Building this has been a live stream. I did not know at the outset if it would be possible to find a fulfilling path. This wasn't an easy option, but I was naive to the danger and felt drawn to it magnetically." Speaking about the impact that Hindenburg's reports have had, Anderson said, "Nearly 100 individuals have been charged civilly or criminally by regulators, at least in part through our work, including billionaires and oligarchs. We shook some empires that we felt needed some shaking. Surely their reports did shake some companies, especially the ones they went after." So what exactly is Hindenburg and why did it decide to shut down? Hindenburg was founded in 2017 by Nate Anderson. It is a US-based financial research firm. As per their website, Hindenburg looks at companies that may have committed financial fraud, made some shady transactions, etc. Hindenburg also engaged in something called short selling. Short selling is basically the sale of a security or share that the seller does not own. In short selling, an investor sells borrowed shares in the market in the hope of buying them back at a cheaper price. The short seller can borrow these shares or assets of a company from any broker or dealer. Some countries like France, Italy, Spain, Belgium, and South Korea have put explicit bans on short selling. These bans were put in place to maintain financial stability and curb market declines during times of economic uncertainty. In India, especially post the Hindenburg-Adani saga, SEBI, which is the market regulator of India, put out a circular earlier this month. It said that all classes of investors like retail and institutional investors are permitted to short sell. It added that all relevant disclosures must be made in that regard. In that same circular, SEBI reiterated its ban on naked short selling. That's the practice of short selling a tradable asset without first borrowing the asset from someone else. Back to Hindenburg. Its founder Nate Anderson did not give a clear reason why the firm is shutting down. To quote from his note again, "There is not one specific thing, no particular threat, no health issue and no big personal issue." Anderson admitted though he wanted to step away due to the stress of running Hindenburg Research. He mentioned the emotional toll of years spent exposing wrongdoing in large corporates. But there are speculations on why this could be happening now. Regimes around the world are tightening the rules for short sellers to protect the market and its investors. Countries like Thailand, China, and even India, like I just said, have put stricter norms in place. Some speculate that Donald Trump's return as US president would mean firms like Hindenburg would have had a tough time surviving. Remember, Trump has been a critique of short sellers in the past. In fact, in 2024, President-elect Trump took to Truth Social, which is his social media platform, to reiterate that he does not plan to sell shares of Trump Media and Technology Group. He also called for an investigation from the appropriate authorities into market manipulators or short sellers, whom executives at the company said shareholders have previously blamed for volatility in the stock, which trades under the name DJT, which is the initial of Donald Trump. The Hindenburg founder in his blog reflected on the exposes that his firm did, which he said he was definitely proud of. In fact, here are some of the major companies that Hindenburg has gone after in the last 7 years. In 2020, Hindenburg Research alleged that Nicola, an electric truck maker, had cheated investors about its technological innovations. Anderson challenged a video Nicola produced showing its electric truck cruising at high speed, where in fact the vehicle was rolled down a hill. Following Hindenburg's allegations, Trevor Milton, who is Nicola's founder, voluntarily resigned and the shares of the company dropped by 40%. In 2022, a US jury convicted Milton for fraud. Then in 2022, Hindenburg took a short and then a long position in Twitter Inc. In May, Hindenburg explained its short position by saying that Elon Musk's $44 billion offer to take over Twitter, which is now X, could get repriced lower if the world's richest person walked away from the deal. In July, Anderson disclosed a significant long position betting against Elon Musk. The deal for Twitter eventually closed in October at the original price of $44 billion. Then, of course, there was the Adani saga, which I talked about in the introduction briefly. Hindenburg alleged that the Gautam Adani-led conglomerate was engaged in brazen stock manipulation and accounting fraud scheme over the course of decades. The Adani Group has, of course, denied all allegations made by Hindenburg Research. In fact, after the news of Hindenburg shutting down came out, Adani stocks saw a rally. The rally in Adani Group stocks followed a sharp increase in trading volumes, with Adani Power witnessing intraday gains of over 18%. Last year, Hindenburg accused SEBI chairperson Madhabi Buch and her husband Dhaval Buch of having a conflict of interest. Hindenburg claimed that they held stakes, that's the couple Madhabi Buch and her husband, held stakes in offshore entities linked to the alleged Adani money siphoning scandal. These charges were based on documents provided by a whistleblower and other investigations. So what next for Anderson and the Hindenburg team? Anderson says he plans to step away from corporate investigations, spend time with his family and pursue his hobbies. He also expressed his intent to open source Hindenburg's methodology. And as for his team, Anderson said he would back whatever their next steps are. He said some would start their own research firms, which he would back. In that case, that work that Hindenburg did for the last 7 years would continue, only with a different name. In fact, here's what Ravi Nair, a senior investigative journalist, told HW News' Neelu Vyas earlier this week.
If you look at the number of companies, the number of listed entities which has governance issue or stock price manipulation or other accounting fraud, how many companies Hindenburg exposed? That's the first thing. Okay, in India, of course, they might have noticed that the unprecedented rise of one corporate entity, which had a total, market capitalization of around $7.6 billion in September 2023, reached to a market capitalization of $262 billion in September 2022. That is very unprecedented, right? So they might have noticed something. A lot of investigation started. SEBI was forced to investigate, or SEBI was forced to say that they were investigating. Then our report came in the organized crime and corruption reporting projects. The report came out in August 2023. Nathan Anderson then tweeted, "One cycle completed." So if I look back and I feel that the Hindenburg report which came out on Adani Group, most of them were circumstantial evidences, except Mr. Vinod Adani's entities, shell entities in Mauritius and other places in Singapore, and their connection with Chan Chung Lee. If it is a clean sheet, SEBI sent 8 shock cause notices to 6 Adani companies based on Hindenburg report and OCCRP's investigative report for share price manipulation, insider trading and accounting fraud, right? And Adani Group applied for settling as per the news report last month. Okay, if they haven't done anything, why did they apply to settle it? So there is no message as such. He came, he exposed Adani, he earned millions, he went away. That's it. There is no message.
You can catch the full interview on our YouTube channel. That's all we have for this episode of Simply Put. Do like and share this video, comment and let us know what your views are on Hindenburg shutting shop, and of course, subscribe to HW News English on YouTube for more such videos. Thanks for watching.
Stay ahead with our cutting-edge news app. Instantly access the latest shorts in just 1 minute and breaking news in just 50 words. Download now for a smarter, faster news experience.